This week, the AI bubble outrunning the warnings.
Unless you're the most optimistic person on the planet, you know you're in a bubble, right? There is no question you're in a bubble.
Google back on top.
I've never had more fun than right now. And I think it's partly the pace, it's partly the abilities these models give to kind of people who can imagine new use cases and products. It's unparalleled.
And the most underappreciated threat to the AI trade.
The world is embracing open source. It's not embracing, you could say, like closed models, private models. Many people on the market side in the West, like investors, traders, they don't really understand the threat of Huawei because they don't even understand what the advantage of Nvidia is.
I'm Deirdre Bosa with The Take. This week, bubble fears did little to slow AI momentum. Dan Niles says Nvidia's blowout earnings may have just saved Christmas. Google Flex Gemini 3 continuing its ascent as AI's golden child. And we talked to Aaron Ginn, the GPU whisperer, on the threat investors aren't paying enough attention to, China. But first, some of the very people building AI are warning of a bubble. What used to be confined to AI skeptics and Wall Street bears, now being said out loud by insiders. Alphabet CEO Sundar Pichai going on the record about irrational exuberance, the idea that expectations and valuations may be running ahead of real capability.
Given the potential of this technology, the excitement is very rational. It's also true when we go through these investment cycles, there are moments we overshoot. I think it's both rational and there are elements of irrationality through a moment like this.
Another AI leader at the company, Demis Hassabis, has gone even further, saying we're seeing classic signs of an AI bubble.
Google DeepMind CEO said, quote, "It feels like there's obviously a bubble in the private market. You look at seed rounds with just nothing really being tens of billions of dollars, that seems a little unsustainable."
And Anthropic CEO Dario Amodei is, quote, deeply uncomfortable with a future where only a few companies make big decisions on AI that could impact jobs. And yet, the spending and the momentum, it's only building. Anthropic, Databricks, xAI, already 3 of the 5 largest private AI companies, they're all reportedly in talks to raise tens of billions of dollars more capital at ever higher valuations. Nvidia says that demand is off the charts, delivering a blowout quarter and raising its forecast, but CEO Jensen Huang's bullish comments on the earnings call, they didn't carry as much weight as the warnings from others. Nvidia shares they gave up all their gains just the day after results. So here's the take. The warnings are getting louder, but the capital keeps accelerating. And that mismatch is what makes bubbles swell. To help us break down the market action and growing disconnect between AI anxiety and momentum, Dan Niles joined us. He's founder and portfolio manager of Niles Investment Management, and he's been willing to call out excess while still trading the AI cycle in real time. Dan Niles, thanks so much for joining us today. I guess we're on the back of Nvidia earnings. Just tell us what it told us about the AI trade and where we are right now, because in the last few weeks, it feels like anxiety has been rising.
Absolutely. Well, I mean, I think it tells us, it answers some questions, doesn't answer others. So with regards to Nvidia itself, I think what you can look at is the fact that they reported revenues last quarter up 56%. And then the one this quarter that they reported, revenues accelerated from up 56 to up 62%. And then they guided to revenues growing 65% year over year. So for a company this size to be willing to beat revenues by $2 billion and then guide above consensus by close to 3 tells you that they are feeling very, very good about what they're seeing. So that's a big positive. The second thing that has been really brought into question is this, what's the depreciation life of these assets and what should they be? And last night we heard that the A100 chips that they shipped 6 years ago, and remember, ChatGPT only came out 3 years ago. These A100 chips were actually being fully utilized still. So this big question that's been brought up recently around, these companies are all overstating earnings because depreciation lives are too long, that actually got put to bed somewhat last night.
Can we unpack that a little bit more? So I saw those comments too from CFO Colette Kress, and she said basically it's because of the CUDA software. How much do you buy that? And is this necessarily good for Nvidia that has a business selling chips for customers that need to upgrade?
Well, here's the thing, right? What happens is you put your latest and greatest chips on the hardest tasks, and then you continue to migrate those chips down to stuff that's less compute intensive over time. Now, for me personally, I go, there's a disconnect between that being said, and if you go back to comments that Jensen has made, the CEO of Nvidia, several months ago, on, Blackwell's come out, why would anybody want to hop it, right? And the fact that they've moved to this 1-year cadence of releasing new chips, which theoretically makes the old one worth a lot less. Those two things, it's hard to kind of put them together in your brain. But the good news is I have talked to some of the hyperscalers. And again, it comes down to do you believe what they're saying or not? And you go, they're saying the similar things. What I don't like, though, is the fact that depreciation lives over the last several years, in general, have been increased.
Why don't you like
because
that?
Because to me, I go, I could sort of see it if it stayed the same. But I'm being told that these new chips that are coming out are so much better than the ones before by Nvidia. And so I'm trying to just reconcile that in my brain.
Is the reason you don't like it is because that, again, increases CapEx for the hyperscalers that are the customers?
Well, no, it's because if your depreciation life is much longer than it should be, then it means you're overstating earnings.
Oh, got it.
Right? And the companies that are using the GPUs in their data centers and have to borrow money to build out these data centers, if they're saying, oh, these GPUs are good for 6 years, but really it's more like 4 years, that changes dramatically what the assets are underneath it, right? And right now you've got another thing going on in the background, which is, well, what's going on with private credit, right? We all heard about Tricolor and First Brands and the problems, going on, the questions around Blue Owl recently. And so those are us interrelated things that you have to think about, because don't forget, you're building the capacity in front of what you think the demand is going to be. So you're investing short term for a long-term return. And investors, are getting, I don't know if they're getting smarter, but they're now starting to question a little bit more things like OpenAI saying, well, we're going to exit the year at a 20 billion run rate in revenue, but they have commitments for 1.4 trillion in CapEx over the next 8 years or so. So you go like, well, are they going to be able to fund that? Right. Meanwhile, if you want the other side of this, Anthropic is going to exit the year at around 9 billion or so run rate revenues, but their commitments are around 100 billion. So those are the things that you need to think about, and you're seeing it in the market in terms of the differentiation between stocks that are related, that aren't in the OpenAI ecosystem versus the stocks that are. And so there's a reason Google's doing so well is because they're everything OpenAI wants to be when they grow up, except Google can fund it all with cash flow.
Which is funny how that's flipped, right? They were seen as a laggard a year ago, and now they're leaders.
But there was a reason for that, right? A year ago, if you look at it, you go paid clicks. If you go back to the first quarter, Q1 of 2023, paid clicks for Google were up 8%, right? And then you fast forward, to a year after that, it was up like 5%. In Q1 of 24, and then it went to plus 2% in Q1 of 25. And a lot of us, myself included, were like, oh my God, it's going down for 3 years. It's going to go negative.
Right.
And then it started to reaccelerate. That Q2 quarter, it was up 4, and then it accelerated again when they reported Q3. So that made you go, okay, Google has figured out how to work in AI results into their search, because now you've probably noticed this, right? You type in a question into your search bar, and sometimes, more than half the time now, it seems like you get back a Gemini.
It was remarkable because they just came out with that new model, Gemini 3.0, and they said they're going to deploy it across that AI mode. So that is just massive scale. That's distribution. That's the chips to be able to do so. at a cost that makes sense. So, Dan, what do you make of these comments, though, that we're hearing from Google leadership this week? You had Sundar Pichai talking about a bubble, Demis Hassabis, CEO of DeepMind, who's really in charge of the AI, all things AI at Google. What do you make of their bubble comments, this time coming from insiders, right? It's not the normal skeptics or bears. What do you make of them?
Well, you have to remember, we've been hearing about this since the middle of last year.
Right, but you didn't hear it from insiders necessarily.
Yeah, you did. You had Satya Nadella at Microsoft saying things like that, right? You did hear this. It's just you've forgotten. So here's the thing. Unless you're the most optimistic person on the planet, which there are several of those that I've heard, you know you're in a bubble, right? There is no question you're in a bubble. Now, it doesn't mean the bubble can't go on for a longer period of time. And it doesn't mean that this isn't the most transformational technology since the internet. Because the way I define bubble is this. The market up until a few weeks ago had been pricing every single AI company like they were going to win. OpenAI was going to win, Anthropic was going to win, Perplexity was going to win, and Google's going to win. You're going to have all of these companies win in AI. But if you look at the tech world, right, think about the internet. Well, how many winners were there in search? Do you hear anything about Yahoo now? What about Netscape?
And maybe that's interesting. Maybe Google feels like it's in a stronger position now to be able to say those things. Dan, I won't keep you for much longer, but let me ask you, sort of looking forward, where do you see the AI trade going next week and through the end of the year?
Well, I think the positive is you've had these things like Sora 2 come out. We talked briefly about Gemini 3. And when you do video generation, that's a massive demand driver for tokens, right? Google said, in May they did 480 trillion tokens, up 50 times year over year. That doubled in 2 months to 980 trillion. And then I think in October it went to like 1.3 quadrillion. So with those things kicking in, I see demand still being pretty good, but what I do see is more differentiation amongst the stocks in terms of these guys can fund all of this with cash flow, these guys can't, and that's going to be the big dividing line, I think, between what stocks work and what don't.
Well, that was a perfect lead-in to our next section because we're going to be talking about Nano Banana Pro, just out from Google on its new Gemini 3 model this morning. Dan Niles, thanks so much for joining us always.
My pleasure, Deirdre.
One company isn't feeling those bubble jitters, and that's Google.
Shares of Alphabet hitting all-time highs today, fueled by its launch of the new AI model.
Even as Sundar Pichai and Demis Hassabis are some of the loudest voices warning about excess, Alphabet is hitting all-time highs. And the release of Gemini 3 is a big reason why. The new AI model jumped to the top of third-party leaderboards, and what's getting investors' attention is how Google built it, fully trained and served on Google's custom chips, TPUs.
I was impressed by it. I think it's a big leap from the prior models, and it showed a bigger than expected leap in some of the performance benchmarks because they make the TPUs, and clearly the differentiation of having your own silicon and investing in your own infrastructure is helping Google.
Evidence that the company is finally aligning its technical depth with real execution, a shift that has coincided with co-founder Sergey Brin re-engaging in the day-to-day and the return of Noam Shazir, two people who helped define Google's early AI edge. And now, in a market that's nervous about runaway spending, fragile business models, Google looks like the opposite, a company with the scale, the data, the distribution, and the silicon to deliver AI at a lower cost. Just days after releasing Gemini 3, Google out with its latest version of its viral hit, Nano Banana Pro, an image generation model, putting its full stack on display. Now the product, Nano Banana, built on Gemini 3, Google's own in-house model, which in turn was trained and is being served on Google custom chips TPUs, all capable of being distributed to Google's billions of users. So here's the take. Google's full AI stack has turned it into the new industry darling and makes its rivals look more like fragmented bets. Josh Woodward, VP of Gemini and Google Labs, he joined me to discuss what Google is getting right now. He's one of the key operators behind Google's AI push. If you want to understand how Google is finally executing on its AI stack, he's the guy. Josh Woodward, thank you so much for joining us. Tell us all about Nano Banana Pro. This is the next iteration built on your brand new model, Gemini 3. What can it do that previous versions or other image generators cannot do?
Oh, yeah. Well, it is an incredible model. It's really good at taking what we saw in the original Nano Banana and giving you professional design superpowers. So it's incredible at infographics. It can make slide decks. It can take up to 14 different images or 5 different characters and sort of keep that character consistency. So when you try it out, you really feel like you're kind of working with something, at least I've never experienced before. It's really fun.
I mean, the last Nano Banana was such a big success. Were you surprised by what people were using it for? Do you have any idea what you think could be sort of a viral moment for this time around? What do you expect to see?
Well, we are very excited about it. And I think one of the things you always learn is kind of what people will teach us new things about it. One thing, Deirdre, that's been happening internally, kind of interesting, people are putting, say, their entire code snippets or even like their resume from LinkedIn and creating infographics out of it. And it's kind of a little kind of fun little viral things that, again, we never could have predicted.
Right.
But I think this ability to visualize things that were previously maybe not something you would think of as a visual medium, that tends to be one of the magic things people are finding with it.
Right. And it's made possible by this new version that was released of Gemini this week, 3, which is, has jumped to the top of the leaderboards. It feels like Google's really having this moment right now. We talk about it a lot on CNBC, fresh record highs today. Maybe a few years ago, you were seen, or even as much as 6 months ago, you were seen as sort of an AI laggard stuck in this innovator's dilemma. But it feels like now Google's really the golden child of AI. I know you've had a lot to do with that, releasing really interesting products to a wider group of people. What do you think has changed or shifted?
Yeah, I mean, it's such a fun time to be building right now at Google. And there's so many both model breakthroughs happening as well as translating those into product features. So I know the last time we talked, it was around Notebook LM, which was one of our new products. I think we're seeing that in the Gemini app. We're seeing that in AI mode in search, really across the company. I think it's, I started at Google as an intern, and it's been such a fun ride. I've never had more fun than right now. And I think it's partly the pace. It's partly the abilities these models give to kind of people who can imagine new use cases and products. It's unparalleled. So I think maybe what you're seeing is that excitement coming through in the products, but it's also kind of this compounding that's happening week over week now. Yeah, hopefully more to come.
Right. And I feel like you've done a lot in terms of making this accessible to consumers. I remember it was really hard to find certain features and products within the Google universe. How do you think about that, making these products accessible, especially with Gemini 3, as you guys are actually releasing and deploying it to a huge group of people, making it available on AI mode?
Yeah, that's right. I mean, we're really trying to meet people where they are. So in some cases, that's in a product like Search that billions of people are using. In other cases, we try to make it actually just kind of fun and whimsical. When Nano Banana took off, and you'll see with the Nano Banana Pro, we just put a big banana emoji in the app. And that was the way people could sort of trigger it and use it. And so I think a big part of it right now is the model capabilities are so advanced. How do we make that in a way that people can understand what to do with it, but also teach us? And so I think it's how do you connect people to that magic? And then we're trying to learn from that and adjust as fast as we can.
Right. And then when it does go viral, I mean, this maybe is a good problem to have, but with the release earlier this year, you guys reached compute limits. So are you confident that this upgrade and rollout has enough compute to support it?
We're going to try our best. We've tried to put all the efficiencies in that we can. It's funny on the team, Deirdre, you never wish for these moments. We call them success disasters because you plan as best you can. And then, sometimes something takes off, whether it's Nano Banana or some of the audio overviews from the past. So it's always a wild ride for sure.
I like that. What is that, success disaster? Is that what you called it?
Yeah, that's the phrase we use on the team.
Good. We could use that in the media world sometimes too. Are you personally involved in making sure that Google's infrastructure can handle surges like the one that we could see when this is released?
I'm involved in some ways, more from the product side, when we're trying to think about things like how wide do we launch a feature, or maybe what rate limits do we provide if someone gets 5 generations per day versus 3 or 10. And so I kind of consult and kind of give our opinions from that side. But there's an incredibly talented team at Google that kind of handles the actual scaling and sort of efficiency drive. And they're they're really some of the heroes that make this stuff happen at scale, like Google.
Right. Now, you're in charge of all these really cool AI releases and products. How do you think about Gemini and these products as a business model? Do you worry about taking business away from search, which may have a clearer business model at the moment?
I mean, right now what we're seeing is kind of demand in all places, actually. So, when we think about something like the Gemini app, we have our subscription plan today, and we'll see lots of people are signing up for that because they want higher limits with some of these advanced models. But over time, I think we'll see how it plays out with user feedback. But I'd say right now we're seeing, high numbers of people coming to lots of these products. And from my seat, that's really the best problem to have is there's a lot of demand, and we're trying to figure out actually how to serve it all.
Right. How do you think about monetizing that? Do you think, right now you mentioned that it's a subscription model. Do you think there's more room for advertising? Any other ways that you're thinking about it?
Over time, we may look at some of that. But for right now, I think what we're really focused on is how do we build a product that people love? And I think our vision for Gemini in particular is we want it to be a personal, proactive, powerful assistant, something that you might turn to many times during your day to get things done. Or to get advice or to think through something. And so that's really where we're focused right now is how do we kind of think about delivering those kind of engagement moments, but also helping people cut through all the stuff in their lives that they need to get finished.
So is it fair to say that you're focused on scale and gaining users right now? And I just also wonder, markets, has their eye on spending. We talked today about the efficiency of Google's custom chips, TPUs. How do you balance that?
Yeah, well, one of the great things is I think we're doing both at the same time. So we are interested in scale and growing, and we're seeing the demand. Even just over the last quarter, Sundar announced we crossed over 650 million monthly active users in the Gemini app. So that's the scale side. But I think the efficiency side is equally exciting. We're now able to serve more people with better models that have more intelligence, more creativity. And so we're really trying to work both sides of it at the same time.
So Nano Banana Pro, if it's being served on Gemini 3, does that mean that there's no Nvidia GPUs involved in delivering these image generations and everything that you can do on this new product?
Yeah, so right now Gemini 3 is kind of a base model. We've trained it on TPUs, it's served on TPUs, but and you've covered as well, we also serve a lot of our models on GPUs as well. And so we'll do that with Gemini 3, and we offer both of those through cloud, both TPUs and GPUs.
Okay, let me ask you about bubble worries. It is sort of the topic of the moment. Do you see it from where you're sitting?
It's interesting from my seat, what I'm seeing is just lots of demand. So whether it's consumers or developers, even small businesses are all trying to use these products in new and interesting ways. So I think what I'm seeing right now is I wish we had even more compute actually to serve a lot of the people that are coming out. And it's interesting, Deirdre, I would say I've been a part of Google over the years in various projects where you'll see maybe it's something isolated to a certain country, a certain segment. I think what I'm seeing right now, it is all segments from, the Gemini app perspective, when we're looking about things like Notebook or Flow, a product we have for filmmakers, it's segments, it's countries, everyone is trying to use this stuff in their workflows. So that's the very clear picture I see right now.
When you look across the landscape, though, it feels like image generation to NVIDIA world models at the moment, it's really having a moment. And there's startups in the space. There's big players like yourselves and OpenAI. Do you see any bubbly behavior in that?
Well, I feel like some of your other guests will probably have a better view on some of that. I think what we see right now is how do we make the kind of new breakthroughs happen, and then how do we make them efficient so we can serve it? And I think that's kind of the main thing I'm focused on with a lot of the teams that we're working with.
Okay, fair enough. Now, you work closely, I believe, with Demis over at DeepMind. You've said before that you work closely in identifying AI products to pursue. Can you give us an example of something you worked on together, or maybe something you are working on together?
Yeah, well, maybe in a future one, we could talk about some of the things we're cooking right now. I think, a couple maybe that some of your viewers will know. I mentioned earlier, Flow. This is a project few of us, including Demis, we got excited about the idea with our video generation model. What would it look like to put that in the hands of filmmakers and rising kind of AI storytellers? That product's going great. We're going to keep scaling that up. There's some exciting announcements coming there. Another one that's made some of the news is there's a project we have called Genie, and that's one of the world building projects. And we're starting to do some trusted testers there. We're very excited about a whole different kind of medium of how you can kind of create with AI. So those are just maybe two off the top of my head.
Great. Well, I can't wait to see that one. We've been playing around with marbles from Fei Li's venture. So looking forward to that one. Josh, thank you so much for taking the time to chat with us today.
Thank you too.
Google isn't the only company releasing new models. The Chinese AI players, they are moving fast, they're moving cheap, and doing it through open source models that are spreading globally. And buried in the Nvidia report this week, Nvidia recorded just $50 million in H20 sales because the orders, they never came in. China is now banning its tech giants from buying Nvidia chips, urging them to switch to domestic accelerators from Huawei, Byron, and more threads. Hardware they control with no risk of future US restrictions. And all the meanwhile, Chinese labs, they continue to release models that compete with the leading US models, but at a fraction of the cost and compute. The take? The China risk to the AI trade is underappreciated, and Nvidia's earnings made it impossible to ignore. Aaron Ginn is co-founder and CEO of Hydra Host. The Information called him the GPU whisperer because of his intricate knowledge and his network to the companies that design, make, and install data centers. He says that the West's attitude toward Chinese AI is the biggest threat to Nvidia's dominance. Aaron Ginn, co-founder and CEO of Hydra Host, thank you so much for making the time to speak with us. First, I got to ask you, you're known in some circles as the GPU whisperer. Where does that come from?
Yeah, the Information wrote that article, and I think that why people started saying that to me is because just the rooms that I float in, the type of projects we work on, it's very heterodox for, let's say the big stargates. We do a lot of sovereign AI work. We do a lot of work with telcos. And the way our model works is that we do these kind of special projects in special places.
Where are we now? I mean, when I think about this week, it's been kind of a big one for the GPU story, right? Gemini 3 was trained entirely on TPUs, not GPUs. You had Nvidia earnings. Where are we right now?
Yeah, like we think compute is a game of unit costs. So basically, it's like you start with the thesis that the cost of compute will always go down to zero. And just like, for example, if you have an old iPhone, we just have a new iPhone right now, right? It depreciates the oldest version and then the 15 and the 14, right? And it always goes down to zero because the innovation always goes up. And that's what you want in an economy. Just like slightly some inflation, not too much inflation, but some inflation is better than deflation because deflation is a cycle you can't stop. So it's kind of the same thing when it comes to compute. It's like you always want it to get more efficient. And so if you're not betting on that trajectory as a business and your whole business relies on H100s going up in value, then I think you're basically like kind of trying to push the cart down an anti-market trend. And so the TPU success around Gemini, which like Gemini is objectively one of the best models like I've ever seen. Like it is a great model.
So Aaron, what do you think then is sort of the greatest risk to NVIDIA's dominance?
I would put the highest on my list would be kind of like just the attitude of the West, which you and I have talked about a fair amount. Of just like, how do we view AI? How does the government view AI? How do the newspapers and media view AI? I think that's kind of something out of their control that is clearly driven by other narratives. And the Nvidia's earnings yesterday were astounding, but the stock price went down. So like there's a very clear kind of disconnect between the actual like fundamentals and the metrics and the numbers and then the actual like narrative around it. So the narrative is something that I think is quite difficult for an individual company to control, but it clearly is moving markets and is clearly is making business decisions. And the second would be like Huawei, China, that they continue to be kind of an island of building its own capacity, its own frameworks.
Right. And
that is something that we, again, like Nvidia doesn't really have much influence or control over.
It sounds like both those things, though, are China, right? The attitude, U.S. attitude towards AI versus China, which is very different, right? It's kind of an attitude of spread their AI ecosystem everywhere as quickly as they can through open source. But also, you're saying on the hardware side, right? You mentioned Huawei. Do you think that investors are appreciating that risk?
No, I think many people on the market side in the West, like investors, traders, they don't really understand the threat of Huawei because they don't even understand what the advantage of Nvidia is. Nvidia is a software hardware combination mode. It's like Apple. Like all of us use Apple devices. It's like that. And so one, they underappreciate the risk because of the fact of like China is actually very good at engineering. They don't just make iPhones. And like making an iPhone is extremely complicated. And I talked to anyone at Apple and they can tell you that. And then the other side though, they kind of like overextenuate, where they think that, well, we can't give them anything, we can't do business with any of them because they're gonna hurt us in some way tomorrow. And that's also like not the attitude of the history of the Communist Party. It's also just thinking how they politically think about the world. They're like, in America, we tend to think of like, we're going to kinetically attack somebody. That's not the way China like works just in general. Just look at their history of conflict. So I
don't
think
they just copy though? They steal IP?
Yeah, like it's because what they're looking for is actually internal stability. There's a reason why the amount of internal security they spend versus external security is about 3 times larger internally. It's because they're mostly concerned with like internal coherence and not imploding as a nation. And I think many people in the West don't really appreciate that because naturally as a country, we're much more externalized. Like the greatest export of America outside of our actual military is our culture. And it's extremely powerful, extremely influential. But in China, the reason why they focus so much on internal adoption, internal security, and internal sovereignty is because they're mostly concerned with stability. And so Huawei and SMIC had the decision to basically become absolute sovereign and ban Nvidia, which I actually did predict in a Wall Street Journal editorial, that it's because what the SEC are trying to do, which is what does impact us, this is less relevant to whether or not we sell to China or not, is that they are going to sell that to allies, to people we're trying to influence. And they're going to offer it at basically zero marginal cost, like almost like free. And we're here being like, well, should we allow people to buy our infrastructure? And it's like, doesn't matter because our main opponent, our main adversary is doing it. And so we have to participate at least in the debate. And then we're also in a position now to where we can accelerate the adoption of American infrastructure and American technology in places that, let's say, is dominated by Airbus or dominated by French manufacturing. And we have the dominant lead now. So we should just take advantage of that and put an American foothold in another country before China comes in and offers a similar solution.
Right. And the idea, too, that the more we restrict sort of our technology over there, the more reason they have to build up their own. Right. And
Correct.
The more advancements that Huawei gets because they can actually sell to Chinese firms who can't get Nvidia chips. What about the idea, too, that American model builders are, it feels like mostly, is that fair, working on proprietary large language models versus China working on open source models that, I don't know, seem to be gaining adoption around the world, if not in the US?
No, yeah, like the world is embracing open source. It's not embracing, you could say, like closed models, private models. And like we as a company and as a personal user, I mostly use private models. Like I don't really have an open source footprint. And so I think some of that is a reflection of the export control policy, where we're over-indexing the number of GPUs in particular countries because it's easier to get, and so therefore you're actually creating protectionism for different like model companies. But the problem is, again, that the world is to use a Thomas Friedman phrase, like the world is flat. So in the open source dominance shows much more the trajectory of the AI value chain. That models are significantly, they're like almost like processing softwares on top of GPUs or XPUs, where they're just commodities, and like everyone's going to build their own model. Everyone's going to have a myriad of models, and so these frontier labs, which I think are doing amazing work. Like obviously, like we just talked about Gemini, and like we use Anthropic.
That's the Mistral.
Yeah. No. Like Gemini, Anthropic, like that's who we use the most at like our company. That again, it's amazing work, but the open source community, which is dominated by Chinese models, shows that like if you look at the curve of like where everything's going, it is going towards low cost models, and so if you continue to protect your frontier labs with VC money, endless amounts of GPUs, you run into this problem of a mismatch of like where the actual adoption's going versus like what you're actually doing in your own country.
What about OpenAI that released OSS, an open source model? Where has that gone?
As far as I know, it's just like a mini version of it, and it's not even like a model you can fully like control, as far as I understand. But
so like a half-hearted attempt, would you call it that?
It's like
at open source?
It's like I think it was pretty much a half-hearted attempt. But I don't think the adoption's gone anywhere.
So Aaron, it seems like you're saying this is an underappreciated risk with investors. How is this being seen inside the government from what people you talk to?
I think the majority of the Trump administration is pro-export the American stack. I think that when it comes to the specifics, they get very hyper-focused on some particular users or countries that then impact downstream of the rest of the country. Like we have to understand that China is the dominant trading partner of most of the world. Now, in terms of GDP, like we're still the leaders. But if you go through all the countries that we're trying to influence and we're trying to be engaged with, they are the number one trading partner in many of those places. And so this is where like the decision then to be threatened that other Chinese people are there is a bit silly when like we're dealing a deal with a third party government in between us. And that we just have to accept that we have fell behind the 8 ball in the fact that China is a manufacturing powerhouse. And if we want to return to the position of being in the leader, we have a good now that we are occupying 90% of the market share, 95% if you include all the other like AMDs, et cetera, alternatives. We have the ability to beat back that trade balance to where we are now the leaders. But instead, I think some people in the US government have the attitude of like, if there anybody who has remote connections to China, even though they're literally the largest country on the planet, that therefore we shouldn't do business. And by the way, that applies to like countries that we sell the F-35 to, that we sell Abrams tanks to, right? That we sell missile technology to.
Why are the Chinese able to influence what happens for something that's built on an open source model if it's hosted on, you know, a country's own servers?
No, the open source is just a means to sell Huawei. So that's my thesis. Is like they make these open source, challenge our frontier labs, so like we offer a cheaper alternative. But the reality is they're trying to sell infrastructure to a government, and then they have a footprint in that country. It's similar to their Belt and Road Initiative for ports and energy and airports. It's like they basically, it's a way that they're doing trade.
Interesting.
And it's a way of they're doing foreign policy.
Aaron, thanks so much for chatting with us. Aaron Ginn.
Yeah, of course.